Welcome to today's show. Tucson Luxe Living features exceptional products and services for the area's top consumers, bringing together high-end real estate, business, money, and lifestyle. I'm your host, Alicia Kramer, local realtor supporting the area's business professionals with their personal real estate needs. Today, I have a good friend with me, Brogan Kemmerly. He's a branch manager and senior loan officer at Nova Home Loans, and we're going to talk about all that fun money side of real estate. So welcome to the show, Brogan.
Miss Alicia, thank you so much for having me.
All right, so let's, I know I said I did not want to start with things that are too timely because people could be watching this a year or 2 years from now, but we kind of just have to go there because the market is absolutely crazy right now at this time of recording. So I do want to spend just a little bit of time going through how you are seeing things from your vantage point. What is happening for your clients with the current state of the real estate market?
Yeah, I mean, overarchingly, I think we're seeing a lot of out-of-state buyers kind of fleeing from the upper and Midwest coast, California and Washington, Oregon, coming down to Arizona. And a lot of these individuals are selling their homes up there and coming here with cash. So, I mean, as you know, nationwide, inventory is already extremely tight. And a lot of our buyers, obviously, we're working with them because they're financing, are getting beat out by these cash buyers. So I guess that's what I'm seeing, a tight inventory market. And we are seeing interest rates on the rise with just the inflationary data we've gotten over the past couple months. I think that, and for the people watching, obviously it's the beginning of June now. I think throughout the rest of this quarter and in quarter 3 and 4 of this year, I think that we're probably going to see interest rates rise to a little bit healthier of a rate for the overall economy. Not talking about 5 or 6%, but maybe somewhere in the mid threes. For reference, right now we're probably right in the high 2%, really low 3% range for a conventional 30-year fixed. So we're seeing interest rates rise. We're seeing prices really get pushed and stretched, as you can probably speak to. So it's an interesting time, but when you align yourself with certain professionals such as yourself and a local mortgage broker or banker on the other side, on the finance side, it really helps in navigating kind of this interesting market that we're in right now.
It is interesting. And I've seen properties appreciate so much in such a short period of time that you've got to wonder, what's going to happen in the next few months. And I know there are people who are jumping on the opportunity to take advantage of selling during this time where they have a lot of appreciation in their home and they can walk away with a nice, healthy profit. What are you seeing in terms of refinancing with the rates being where they've been?
Yeah, I mean, rates are obviously historic lows. Rates, if we were having this conversation at the end of 2020, we're just ridiculous. If you're looking at the same scenario for a conventional 30-year fix, you're looking like 2.5%, which is unreal. I think as we're seeing rates kind of normalize and kind of come back to a normal or healthy, low 3% range, that equity creation and with the rising values that we've been seeing, people are maybe shifting more from like a rate and term just to save money to maybe looking at taking out some of that equity to consolidate debt. So I've been doing a lot of debt consolidation refinances for people, and whether it be saving an individual money or helping them consolidate debt or helping somebody purchase their 10th investment property, it all gets me jacked up. I mean, I just like to help people, right, as you do. And I like to make this process as seamless and smooth as for everybody that we work with, and via our process and everything happening in-house, we're confident in that. But the debt consolidation piece really, really gets me excited because I can show somebody, if you take out the $50,000 worth of equity that you've got in your house or whatever the amount is, and you put that towards paying off this high interest debt, you can only increase your mortgage payment by say $70 a month. But being that you're not going to be making these credit card payments or car loan payments or whatever they are, we're saving people. I was just this past month, we saved an individual like $650 by paying off some of this high interest debt. So to answer your question, I think we're seeing more of a shift to taking cash out of their home for whatever it is. And I think on that same note, with kind of tight inventory, I've had a couple of clients who have just gotten frustrated with, oh my gosh, I can't get an offer accepted. I'm getting beat out for whatever reason. I'm just going to decide to stay in my home, and I'm going to take some equity out, and I'm going to fix my home up. So we're seeing a lot of that as well. I think there's a lot of money in the system, and especially coming off of 2020 with the stimulus checks and obviously people staying in their homes with COVID and quarantine. I think people are getting jacked up to get back out there and have the means to do so. So it's like we just said, it's an interesting time for sure, and in real estate and in life, right?
Oh, yeah. Isn't that so true?
Yeah.
So we talked a little bit about a product that you guys are offering that I think is, I mean, it could be a game changer for some of the prospective home buyers that are really struggling with this whole lack of inventory, massive competition, especially in some of those certain pricing tiers.
Yeah.
Let's talk on that. Let's talk about the delayed financing. So tell us a little bit about what that is and how that comes into play.
Yeah, it's a huge tool that not a lot of people know about, but ultimately, as we were stating, a lot of people are coming from, the West Coast, wherever they're coming from, with cash. So as you can imagine, from a seller's perspective, if I was selling my house and I've got, one offer for $250, that's financed, it's a finance deal, it's going to take 30 to 45 days to close, versus the same $250 offer, but it's cash and I can close in a week, I'm going to take that cash offer, right? So we're seeing that happen a lot, and that's kind of goes into a lot of buyers are getting frustrated because their offers aren't getting accepted. A lot of the people that we deal with, as we're debt managers and we see the whole financial picture for individuals, I see in certain scenarios people have money where they can pay for the home in cash, and they say, Brogan, why would I want to pay for this home in cash when money is so cheap right now, and I can put that money to work for me in a different vehicle where I can just maximize my financial position? And Mr. Client, I completely understand where you're coming from. I understand, but this person, say they've been beat out 4 times by cash buyers, you can utilize this delayed financing piece where you buy that home in cash, and then literally the day after closing, you can turn around and do essentially a cash out refinance on the property and extrapolate 80% of your initial acquisition cost in terms of cash out. So it would be essentially the same as purchasing a home with 20% down. And there's not really a downside to doing that. I mean, it'd be considered a cash out refi, so rate's a tiny bit higher. But that's a strategy we've been utilizing with a lot of our clients to get them into that home, compete with those cash buyers, but still satisfy and meet their goal of financing that home and not putting all their money into the house and putting that maybe in buying some Bitcoin or Dogecoin. I'm not endorsing that by any means, but it's literally being spoke on CNBC behind me. So that's why I'm saying that.
Yes.
But
Those types of investments are kind of like gambling. It's like buying a lottery ticket.
Oh my goodness, I don't know anything about it, so I can't,
you got to pay to play.
Yeah.
So I think that you covered a couple of really good points in that explanation, because there is so much competition, and there is, and I've seen it. There are people that are extremely discouraged right now. I've had, at one point, I think I was working with 5 different buyer clients. Some of them were from out of state, some of them were local.
Yeah.
All within kind of those the sweet spot price points.
What do you think that is, Alicia, the sweet spot?
Well, most people can afford that.
Yeah.
It's once you start to get up into those upper tiers, you have less buyer pool. There are less
Sure.
people who can afford a $1 million home than can afford a $350,000 home.
Yeah.
So now you've got a lot more competition.
Mm-hmm.
And it was so discouraging and so disheartening to keep getting either beat out on offers, like you said, by people who had cash, or maybe they were qualified for a conventional, which was a little bit more enticing to the seller than an FHA loan. And then my out-of-state buyers are getting frustrated because they're seeing a listing that I'm sending to them and they're interested. And by the time I call the listing agent, which literally in some cases is hours after it's just listed on the market, I'm hearing that there are already, 10 offers on it, or a contract is being negotiated. And so I've seen a lot of people literally like pulling out of their home search until things stabilize. So when you can go in with a little bit more of an advantage, it really does make a significant difference.
Oh, without a doubt. I mean, you kind of have to do anything to distinguish yourself in terms of multiple offer scenarios in this market that we're in. And I don't want to let this thought leave my mind, and something that you touched on in terms of sellers getting discouraged or favoring maybe a conventional pre-qualification letter versus an FHA or a VA or a government loan, if you will. On the lending side, just so individuals know, it's really not, it's not more difficult to get that type of loan done versus a conventional. I think that a lot of sellers are kind of apprehensive about FHA or VA appraisals because they think that appraiser is going to be more particular and more scrupulous over the property itself. And just so everybody knows, it's not an FHA or a VA appraiser. They're not going to be more apt to point things out necessarily. I think any appraiser has to identify health and safety issues, just as we're on the topic right now. And in FHA and a VA, that's especially true. So one thing that I've seen while we're talking about a government FHA or VA appraisal versus a conventional is an FHA or VA appraiser, if there's like chipping paint on the fascia or something like that, that's absolutely something that they're going to call out versus a conventional appraiser wouldn't. Because if a kid were to like put a paint chip in his mouth and eat it, that's a health and safety issue. That's something that's actually just popped up with recently a couple of times for us here. But if you do have any buyers out there who aren't qualified conventionally, it's not that big of a deal to go with an FHA or a VA loan.
There are oftentimes misconceptions that people have. And it's prevalent in essentially any industry, I should say. But I've heard it on both sides. I've heard it come from real estate professionals, and I've heard it come directly from clients. And it's just one of those things where somehow people had, they have this idea in their mind, and now there's this whole stigma around this, this type of financing, and people just have this negative expectation going into it that it's less than ideal, and it doesn't need to be that way. I'd love to talk a little bit more about the appraiser side of things from your vantage point, because, we're seeing people putting offers in well over the asking price. And in many cases, homes are not appraising. And it is creating a bit of conflict, we'll say. I'm seeing a lot of the talk within the industry, pointing fingers at appraisers. They're not doing their job. They need to understand that home values are increasing, and other people are saying, well, they need to keep this under control so we don't create another housing bubble. Things are kind of just spiraling out of control. And now with, in our area, we have a lot of new construction as opposed to some other areas in the country. And now we're seeing the issues with lumber shortage and all these different things. And that's creating this whole another, and so it just seems like everything's compounding and driving up the prices of homes. And from my experience, when you have a property that does not appraise, well, something's going to have to give, right? So what are you seeing in this market with all the crazy stuff that's going on with home prices increasing and multiple offer situations? Are you encountering a bit more of those appraisal discrepancies?
We've definitely seen some low appraisals, which I mean, as you said, as sellers are trying to get the most for their house and listing agents are trying to get the most for their clients, I understand. So I think it's not the worst thing that we're seeing low appraisals. I mean, there's those checks and balances where an appraiser's saying, for your area or for your home, there's just not the data to support the value that it's being sold for. At the end of the day, I think whatever something is worth is what the market bears, right? I mean, say that I live in a townhouse in central Tucson and I'm selling it for 400 grand and somebody's willing to pay for that. We're under contract for it, but there's just no data to support, what I'm selling it for. I got someone who's going to pay for it for 400 grand. So I think that's what it's worth. It's just what data can be found to meet that value. So we are seeing some low appraisals. At the end of the day, as a lender, we can only appraise on, or we can only lend on the lesser of the appraised value or on the sales price. So as you said, something's got to give. In this market, especially when there's so many backup offers, unfortunately, we haven't seen too many sellers giving too much. I've probably, and you can speak to this as well, but I've been seeing buyers having to come up with more of that delta versus the sellers. I don't think it's always meeting, directly halfway in the middle. I mean, but that's just the environment that we're in. Fortunately for the low appraisal scenarios that we've had, the clients want the home and they've got the means to come up with that difference. So it is what it is. I mean, with certain appraisals, like a VA appraisal, if it's logged in the FHA connection, or an FHA appraisal, if it's logged in the FHA connection website, if you will, that value is going to stick with that property for 6 months. So I think that in those specific scenarios, sellers are taking that into consideration and, coming to a deal, if you will. But I mean, it is what it is with the low appraisals that we're seeing. We've got appraisals on our panel, obviously, first and foremost, before I kind of talk about inventory and what we're seeing with raised appraisal prices. With all of the volume, especially in the first quarter of 2021 and midway through 2020, finishing out that year, appraisers it was so frustrating for us as lenders and you guys as realtors, because appraisers had kind of their pick of the litter. They could charge as much as they wanted for an appraisal report, and they were just picking the easiest cookie cutter homes and not touching maybe the property that's a little bit outside of the city limits, that's unique, that they would have to do more work for. And appraisals were taking, oh my God, in some cases 30, 45 days from acceptance to even come back to us. So that's just a side note that I just had a conversation with my team about today. Very frustrating. Either way, I think that as rates continue to rise and as buyers either come or stay in their current home, I think that we're going to see things kind of level out here. So we'll see. But what I was kind of getting at is we have appraisers on our panel, and we're seeing in some of these scenarios, these appraisers are telling us after the fact or whatever it is, that listing agents are just providing backup offers instead of comps for homes to support the value. Obviously an appraiser, they can't do anything with a backup offer. If you got 5 backup offers for 20 grand over what the list or the sales price is for this scenario, they can't use that on the appraisal report. So it was interesting for me to see listing agents providing backup offers as comps versus data. But it is what it is again there.
Yeah, it'll be interesting to see if some of these unusual circumstances that we've all been experiencing do influence some changes to how things are done moving forward.
Yeah.
It seems that anytime there is anything radically different that happens in the industry, that changes follow. Mm-hmm. And we we just have to kind of be, I think, well, one is we need to stay positive because, it can be very frustrating for us as professionals. We want to be of service to our clients. And in many cases, our hands are tied. There's only so many things we can do within the regulations and the laws and just our capacity to, step in and help out, in these circumstances. But it's also, it's interesting because we have to be somewhat flexible, and we have to be resilient. And I think a lot of times we have to also educate our clients, because these things can be extremely stressful. And it does not matter, it doesn't matter if you're a first time home buyer and you've never gone through the process before, or if you've owned multiple homes, or if this is, your second, home here. If you're, escaping your, cold weather. The fact of the matter is it can be very, very, very stressful. So we really do need to educate and inform that, the circumstances are sometimes they feel like they're out of our control. Right. And we all want to be able to close a transaction in, we'd love to be able to close it in 15 days, Sure. And sometimes we just can't. Right. And it's not even because you're not willing, or I'm not willing, or the buyer or the seller isn't willing. It's literally because the appraisers are booked out, like you said. Right. For 30, 45 days. Right. So
no, it can definitely be, to your point, it can be stressful for everybody involved. But when you're going through a scenario like that's emotional, like a home purchase, especially, I think it's really, that's where it falls on the professionals like yourself and a mortgage banker or broker to be able to just manage expectations and openly communicate what's happening in that environment. That's why it's so great. I think why it's so great you're putting out, a podcast like you do, kind of just talking to different individuals about what's happening in the environment here. So I'm not touche to you, and hats off for sure. Everybody should tune into this. I know I have, and there's definitely some good takeaways for sure. But yeah, it's just all about managing expectations. And when you're dealing with a process such as buying a home, that's ever more present for sure.
Well, and I would just like to also say that there is something to be said about the professionals that you're working with, which seems intuitive. And a lot of us that have had maybe less than ideal experiences and raised our standards, we expect a certain level of professionalism. But from my experience, and I'm sure everybody listening to this can relate, not all professionals are equal, right? You can go to, a car mechanic, right? And one can give you 5-star service and do a phenomenal job, and you leave feeling like that was a fantastic investment, right? You could go to the one right next door across the road and have a completely different experience. And, I have had the luxury of working with you where you basically were able to take a less than ideal situation with a different lender and completely turn things around. And that, comes down to one, being realistic. Most people are smart enough to know that it's not always rainbows and butterflies, and a lot of people are so preoccupied with selling that they're telling people what they think they need to hear in order to get their business, and they cannot deliver on that. Sure. And it doesn't serve anyone at all, so you at you and Lance at Nova have been such great professionals. And that's why I'm so happy to have you on and, get you guys some exposure, because I can personally, give you a, 5-star, recommendation and review, because you walk your talk, you're out there and you're doing the right thing by your clients. And it's a tough industry sometimes to be in. It's so exciting to buy a beautiful home, but it can be a little bit stressful. And when we can help to take some of that stress off of the client, I think that is more valuable than any money could buy.
Oh my goodness, that's part of our job, just to make the process as seamless as possible, for our clients. And thank you so much for the props there. And it goes both ways for sure. I remember when we met, when we all sat down for the first time, we said, we, in terms of referral partners, we don't necessarily want to work with every agent out there, but it was so easy for us to identify that we just want to work with people who do business like us, who have the same, character and stick by their word and really just do what they say. And when we met with you, it was apparent that we're like people there. So no, it goes both ways, but I think that you're doing yourself a disservice, absolutely doing your client a disservice, if you just tell that individual what they want to hear to acquire their business. And then say in a listing agent's position, you'll have that listing for 3, 4, 5 months. And okay, maybe we've got to lower the price back down to what, it's actually worth. That's shady, if you will, in our book. And no, you got to work with people who are solid, and there you are, here we are. So no, it's a blessing. It's a blessing for sure.
So where can our listeners go to learn more about you and find out about all the different services that you offer?
Yeah. So our direct line is 520-750-8888. That comes right to our front desk here. We've got a whole team at our Swan branch office. We are 2810 North Swan Road, Suite 160. So we're right on, just bought a beautiful new office on Swan and Glen, just south of Trident 2, if you're familiar. Obviously we're open 5 days a week. We can make it 7 if need be. But if you want to check out and kind of peruse around some of our content, I would say our Facebook, which is the Dickson Team or the Lance Dickinson Team. Instagram name is the Lance Dickinson Team as well. We've got some good content there for sure. We just try to provide as much value as possible, such as you're doing, with this awesome platform that you've got going, Alicia. But we do a weekly market and rate update at the end of every week, where we just try to talk about kind of what's going on in the market, what happened in the market for that week, just to give people information. We don't want, whether it be a realtor or CPA or a client or prospective buyer, we don't want to be the lender just with our hand out and take. We want to give as much as possible. So that's kind of one of our ways to do so. So check out our Instagram page. I think we're pretty savvy with technology. We're trying. We don't have a podcast yet, but that's something to think about. But yeah, that's where you can find us for sure.
Awesome. And I always like to end every episode with an opportunity for you to share any final thoughts.
Final thoughts. Absolutely. Always. I think in this ever evolving and ever competitive market, align yourself with somebody who has a good reputation. If you're a buyer and you're with an agent who's submitting offers on your behalf and they're kind of known as shoddy, or same thing with a lender, I don't think that's going to do you any favors. And for reasons we've discussed in this kind of podcast today, it could hurt you down the line. So work with a solid individual who's got a solid reputation and is tried and true. That's kind of, I guess, my closing, not argument, but closing thoughts.
It's a really good final thought to leave people with. And I'll just elaborate on that real briefly, because there are a lot of people who will, they'll work with the agent who was their, best friend who just got their license, but maybe they can feel something's not right about it, and a lot of times we don't want to hurt other people's feelings. So we stay in situations that, our own inner guidance is screaming at us. It's like, get out of here. And at the end of the day, it really comes down to the fact that, we're talking about big money here, and it doesn't matter. You could be a multimillionaire and it's still big money. It's still big money.
Sure.
But it's also about the experience and being treated with respect and somebody who actually has your best interest in mind, and you have to be able to sometimes let go of the want so much for somebody else's approval and do right by yourself.
Mm-hmm. Mm-hmm.
So
no doubt. No, I love it. And there's one thing that I forgot to put in my kind of closing statement, if you will, because it just happened today, actually. For any VA loan that we do here at Nova, we're going to be waiving our only lender fee, which is our processing fee. So we just want to give back, to the veterans and current active duty service people who sacrifice so much for us. So that's kind of, what we can bring to the table and what we can give back to vets, whether it be a purchaser or refi. There's no lender fees.
That's awesome.
So yeah, if you know anybody.
That's awesome. Very, very awesome. Yeah. Thank you so much, Brogan. I've actually enjoyed this conversation so much that we probably could just keep going and going and going. But we'll wrap it up, and maybe we can have you back on in another couple months and just get the pulse on the current market situation after some of this craziness. Who knows? Maybe we'll have a new kind of craziness we can talk about.
We'll see. No, thank you. It was such a pleasure, and God bless you and yours, and we'll speak soon.
Awesome. Thank you, everybody.